I think we are in an early stage of a bull run, which might, historically, looking back, compared to this one. And it's also, we should see some confidence coming back into this market. People believing this is sustainable, what we see in the gold price. They have to buy gold producers and exploration and junior companies. They have to do it. At the time we are talking, we are at $2,300. I think we will see at least $2,500, $2,600 this year. If it's the end of the year, I don't know. Maybe it's another correction at the end of the year. But I think we see higher gold prices over the year. And what for the viewers most important is we see higher prices for junior mining companies and even for producers.
Gold's shining a bit too bright these days, at least according to the most bullish group of investors seen in 2 years. Gold prices attract some sellers on the firmer US dollar during the Asian trading hours on Wednesday. The hawkish remarks from Federal Reserve officials dampen hopes for potential interest rate cuts in 2024, despite weaker-than-expected U.S. employment reports in April. Nonetheless, safe haven demand, fueled by geopolitical tensions and uncertainty, as well as ongoing central bank purchases, might contribute to a rally in gold. Markus Bussler is a leading commodity and mining stock journalist renowned for his insights and comprehensive market analysis. From a technical viewpoint, Markus Bussler predicts a promising outlook for gold and miners, drawing parallels with historical bull runs. He believes we are in the early stages of another upward trend, driven by factors such as stagnant inflation and rising interest rates. Amidst the dynamic currents of global events, Markus spotlighted a pivotal period from the early 2000s to 2007. Gold prices surged from $300 to $1,000 within this time frame, notably coinciding with the dot-com bubble's collapse. Despite the stability of several economic factors, he observes that the recent surge in gold prices seems driven more by market sentiment than fundamental shifts. The price predictions for gold are generally optimistic, with many expert statements mentioning prices of $3,000 in the near to mid-term. While $2,000 is a significant psychological support level, some analysts are even more bullish, anticipating a potential short squeeze beyond this threshold. This could pave the way for even higher prices by 2025 and certainly by 2030. With a keen eye on the horizon, Markus foresees silver climbing to $30 soon, but he cautions against overconfidence. He predicts that investor interest, not industrial demand, will steer silver's path, marking a notable shift in market dynamics. Several key factors are expected to influence the bullish outlook for silver in 2024. First, the ongoing supply challenges, including the deficits reported in previous years, will likely continue due to limited new mining projects and regulatory hurdles, particularly in significant silver-producing countries like Mexico. Now we present the clips of Markus Bussler's insights from his recent interview with SOAR Financially. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I guess there's one, the history of gold starts at 1970 with Bretton Woods, or end of Bretton Woods. So it's not that long. And first of all, you got this stagflation environment, and you got these 80s where nothing really happens. But I think one time frame you can compare it is the beginning of the 2000s. It was the dot-com bubble burst, we have 9/11, and then suddenly gold starts to run in an environment where also the interest rate was rising, and by the way, also stocks were rising. And this was from 2002 to 2007, and gold goes up from $300 to $900, $1,000, and this is, I think we are in an early stage of a bull run, which might, historically, looking back, compared to this one. And it's also, we should see some confidence coming back into this market. People believing this is sustainable, what we see in the gold price. And they have to buy gold producers and exploration and junior companies. They have to do it. We still have positive real rates in the US. We still have a strong dollar. We still have these rate cut might come or might not come, so it's still more in the future than it has been at the beginning of the year. So it hasn't been one really fundamental argument why it comes now, this move in the gold price. And I think it's really, it's really about sentiment. It's really about a grade of fear it's in the market. We see very high valuation by many high-tech stocks. And I think smart money is saying, hey, there's an election in fall. We are a little bit scared what will happen there. And this is positioning itself for what might come in the market. It shows us this bull market in precious metals is in an early stage. Because it's a typical behavior of a precious metals bull market is first gold, then silver is picking up, and then silver taking the role as a leader. So for me, it's a good sign that silver hasn't moved yet, and I think it's just a question of time when silver's breaking out above $30. And yeah, so it might happen this year. I'm pretty sure it will happen this year. But if you're going to $50, everybody's cheering from a rooftop, and it's probably time to sell. I know everybody's talking about industrial demand in silver, and everybody, but expect it to go up 2% or 3%. Does it really care for the silver market? I think the big thing is investors coming back to the silver market. Investor demand is picking up. This will be the game changer for silver as soon as investors discover silver as a cheap alternative to gold.
During the interview, Markus Bussler expressed reservations about the performance of Newcrest and Barrick, the critical components of the GDX index. He attributes this positive trend to upcoming asset sales and anticipates improved production and reduced costs shortly. This optimism fuels expectations for positive movements in the GDX and its significant components. For cyclical investors, spot gold's consolidation following the metal's steep bull run could signal that traders will begin switching their focus toward gold miners. This latter has underperformed the movement of the physical commodity. Markus pointed out an interesting trend regarding the producer side of the market. Despite challenges, producers are still undervalued and profitable, primarily due to the high price of gold. He noted that analysts' slow adjustments to rising gold prices contribute to low expectations that companies easily surpass. Let's get back to the interview.
If you talk about the GDX, we have to talk about the big components in the index, and this is Newman and this is Barrick. And there's nothing to be excited about Newman and Barrick over the last couple of years even. So nobody's really happy with this Newcrest takeover from Newman. Everybody says, well, it might be expensive. And what really nobody understand, I think, is paying the Newcrest shareholders a special dividend, and in the next meeting saying we're cutting the dividends to our existing shareholders, and this is not what you expected as a Newman shareholder from the number one producer in the world, the gold price at $2,200, $2,300. So I think everybody's a little bit disappointed, and to be fair, Barrick has some problems from the past. Fixing one after the other. Free cash flow is picking up, and of course by Newman it's picking up because we are selling assets over the next couple of months. So yes, we'll pick up. And as long as I follow it, I see many companies say the first quarter was our worst quarter of this year, and production will pick up, costs will come down. Free cash flow will pick up, of course, if costs coming down and production coming up. So yeah, I think it will, and this gives us some hope that even the GDX or the big components in the GDX are going to move in the right direction. The secret returns in first of all in the producer side. Producers are still unloved, cheap, printing money. This even if they got worse numbers like Barrick putting out production numbers like we produced 940,000 ounces, and everybody was like, what? Really? The worst numbers for I don't know how many years, but they're still printing money at this because the gold price is so high. You can't do anything wrong. So nobody really realized this. I told it on stage. It's probably the fault also of the analysts. They're doing the math at the beginning of the year. They say we're calculating a gold price of $1,900, and they don't keeping up with the gold price going up. So expectations, as I mentioned, very low. So it's easily to beat them, and this is what companies do.
According to experts at the Gold Bullion Company, interest rates, British pound to US dollar exchange rate, and US political stability are among the key reasons influencing gold prices. Despite the current weakness, experts maintain a positive outlook, interpreting the downturn as a healthy correction rather than a complete reversal of the bullish trajectory. This resilience underscores the enduring appeal of gold as a safe haven asset amidst economic uncertainties. In this evolving scenario, how do you envision navigating the opportunities and risks the precious metals market presents? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.